The resulting dollar weakness should have helped our rand today, but instead the currency was whacked by renewed concerns about the health of the Chinese economy mentioned by the Fed. The concerns have been intensifying since China's shock devaluation of its yuan last week. Well, to discuss, we're now joined by Brigid Taylor through Skype. Thank you for joining us, Brigid. We're like a ping pong ball, aren't we, between America and China, or maybe Piggy in the middle?
Well, it actually feels to me like a little bit like frog in boiling water, to be honest. It's we're in a scenario where the rand has really weakened significantly this year. You were mentioning 11%, but it's also that psychological 13 level, because those are levels that we haven't seen since 2001. And this is quite significant in a backdrop where, as you mentioned earlier, the US economy, potentially they're going to see interest rate hikes. That's going to continue to plague South Africa, especially, as well as emerging markets. And then you've also got the likes of the Chinese slowdown, which means from a commodity perspective, we can also expect further pressure. But what that really means is for South Africa, particularly for us who are net importers, in terms of our inflation outlook, it's going to become expensive to import goods from offshore, and that's going to impact you and I.
I guess nobody's really saying anymore that we want a weak rand. Like you say, we import a lot of goods. Generally, for our economy, this is bad news all round.
It is indeed. Unfortunately, with the commodities coming under so much pressure, if you look at what's happening in China, the big drive there is to say they don't need as many commodities as they did previously because they're not spending a lot of money on infrastructure. And what that means for the likes of South Africa is that our exports come under pressure. So unfortunately, what that ultimately means is that the imports become more expensive and nobody's really demanding our exports. So ultimately what happens is the cost for us in terms of food prices, in terms of vehicles, in terms of anything that we import from offshore will become a lot more expensive.
13 rand, apparently a psychological level. What does that mean? And could we spiral down to the all-time low, which is around 13.84?
Sure. Well, it certainly looks that way. I mean, I was chatting a little while ago on a show that I host around currency wars, and we were looking at 12.25 at the time. And a big press at that point was 12.50. Quickly galloped through that in the last 2 weeks, as you mentioned, to trade just around the 13 level. So yes, it is very psychological. However, the big thing that's key at the moment for South Africa is that we are not managing to benefit from a weaker dollar. We're not managing to benefit on the back of a galloping gold price. The emerging markets are under pressure. The South African economy is under pressure from investors that are starting to lose a little bit of appetite for the South African. So if we look at our stock market, we look at our bond market, all of these are coming under pressure, and that's showing you its levels in the rand with that 13 level trade.
All right, we're losing sound there a little bit, but thank you for the analysis, Brigid Taylor from Kaon Capital. Well, some exporters, not many, but some, are benefiting handsomely from the weak rand-dollar exchange rate. That's according to the Manufacturing Circle's quarterly review for the second quarter. The rand fell nearly 1% against the dollar today, of course, breaching that 13 rand for the first time since 2001.
The manufacturing sector has not been doing well for some time now. In fact, the sector considered the heartbeat of the economy is probably on the brink of a recession. According to the Manufacturing Circle, sentiment is downbeat and outlook for the future is bleak. But it seems currency weakness is favoring some exporters. They have a competitive exchange rate and a buoyant demand from Africa.
About 15% of those who participated, they are benefiting handsomely because the currency is in their favor, they are not that dependent on the mining sector, and they manage their energy disruption quite nicely, so they are benefiting. But